So, David, can we make money if a property market crashes? Because, I mean, this video sounded a little pessimistic, this series of videos. And I don't want people to think we're pessimists, because we're entrepreneurs. We make money from property. Is it possible to make money in a crash?
Well, let's put it this way, Andrew. I've been investing for an awful lot of time. Probably between this, we've probably been investing about 60 years, haven't we? I would guess.
Yeah, easily, easily.
And that takes in quite a lot of crashes. It takes in three crashes in my case, probably two more in yours. So over the course of these five crashes, and I think my feeling is that I don't know which one you think is the worst one. I think the worst one was the 2008. I
I
don't know what your
actually
view
think
is.
the one in the 90s was worse. 2008, it was a balance sheet thing. Banks' finances didn't look good because banks had been doing these CDOs, collateralized debt orders. They'd been writing, basically making money out of thin air. Whereas back in the 90s, it was real people that were affected. There was unemployment. We can go back to the different industries that were closing down. People had suffered with exceptionally high interest rates, and they'd been buying houses at prices that were unsustainable, and then prices crashed, and people were trapped in negative equity for, well, I've got friends who were trapped and eventually sold, I think about 12 years later, still in negative equity from their property. Because at the time, you'll remember this, 125% mortgages, 125% mortgages. So it was dead easy to get into negative equity the day you bought. So I think that was a lot worse. And when you look at the number of house repossessions, the numbers of house repossessions in the 90s was worse than it was in 2008. That's my personal opinion. Do you agree with David or do you agree with Andrew? Who do you agree with? Comment below.
I've got to tell you that I agree with Andrew, and so, so that rather makes the thing a bit short. But here's the thing: it's about nostalgia, isn't it? And I think of the good old days of like in my early 30s, the world was my oyster, or as the famous Arthur Daley once said, the world was my lobster. You've got a world of possibilities in front of you, and I personally had a great sort of feel good factor in what I did, and I was doing a lot of my acquisitions back then because, as you say, it was so easy.
Yeah.
And so from that point of view, I think those were quite good times. But yes, the economy was possibly a bit shakier and wobblier there, and that maybe that tells us something about all of it actually, because I didn't feel as feel good in 2008-9, because by then it was very difficult for me to get anything more than about 20 or 30%, because interbank lending had frozen, so it was very difficult for me to get more than say 20%, 25% loan to value on stuff I was buying, which eats into the piggy bank very, very quickly, and so that's perhaps another side of it.
Yeah.
For me personally, for us personally as investors.
It was a series of dominoes where Bank A had lent to Bank B, who'd lent it to Bank C had lent back to Bank A, and then Bank A asked for its money back, and it's a whole series of dominoes spiralling downwards. It was an interesting time, and having worked in banking, I do understand the politics that was going on there and the games that were being played. But then again, let's move on. We're talking about, can we make money in a crash? I mean, lots of people sell at the bottom of the market, and lots of other people buy at the top of the market. So that's irrational decisions. They're not what I'd call investors. That's a home buyer type mindset. But what do you think? Is there another type?
Yes, in the sort of the home buyer type mindset could be cruelly described, if you like, as you said, sell at the bottom and buy at the top, repeat until bankrupt. And that is kind of what goes on. But for anybody who's going to invest professionally in property, you understand that there are these long-term trend lines. You understand that at the bottom of the market it's going to recover, because property, what do we all need? We all need a home to live in and food to eat. So particular kind of distributors of food may go bust, but there'll always be a sector there. And again, particular house builders or whatever may go bust, but there will always be a demand for property. So if you're prepared to take a long-term view, and if you can buy these properties at a point where they actually turn you a bit of a profit, and the tenants, whether it be commercial property or residential property, the tenants that you have in place are paying the bills and picking up the tab for owning this asset that over time is going to increase in value, there's not much downside to it really, is there?
There certainly isn't. And I would also add that the government have stimulated and encouraged investors and developers by introducing a whole raft of permitted development rights to add 2 additional floors to buildings that you already own. That's going to stimulate the base of the economy, the building sector, which then buys raw materials, labour, goes into supermarkets and cinema spending. There's the rules to be able to demolish and rebuild something. There's the permitted development rights to convert offices, shops, barns, industrial warehouses to residential. So all of these are areas that the government are stimulating the market, but also opportunities where you can make money even in a crash.
Yes, and let's not forget as well that the government is spending a lot of money on infrastructure projects right now, and green lighting a lot of these as well, which will also create a lot of jobs and create a lot of stimulus for the economy. So let's not knock these fellas, because this wasn't really something you could plan for. This is sort of emergency room type stuff. And I'd say, anybody is going to criticise any government, but it's not the government's fault that all this happened. And I doubt that any particular government or whatever could do any better.
Yeah. So are we sort of summarising that there is opportunities to make money in a market crash by buying shrewdly, buying at a discount, adding value to what you've bought at a discount, so that even if the market fell to where your discounted price was, you've added value to push the price back up above your acquisition cost. Therefore, you shouldn't rush to sell. You should seek out where you can add value. Would that be how you would summarise it, David?
Yes, I think that's some excellent advice, Andrew. Unless, of course, you can sell one property and with the proceeds buy 3. Then you might be able to short circuit that process of adding the value. And I have done that in the past as well.
Very smart. Very smart. Well, David and I have given you a lot to think about in this mini series on how and when the property prices will crash. In our next video, we will talk about why prices are going to crash 40%. If you haven't already, hit the subscribe button. Hit the share button if you think somebody you know would benefit from this. And again, if you've liked it, stick us a thumbs up. Really appreciate it. And drop us a comment if you agree. If you don't agree, tell us you don't agree and tell us what you don't agree with. And if you want to see a video on another topic, let us know and we'll go do the research, put in the hard spade work, pull out all the data and present the graphs to you in an easy to digest format. So it's thank you from me, Andrew Roberts.
And thank you from me, David Clouter. We hope you'll join us again next time.
We are the Professors of Property. If you haven't already, hit the subscribe button.